Hi, I'm Mike Capizzola, and welcome to IPGo, the show where we take a look at the IPO world, past, present, and future. U.S. equity markets have enjoyed a buoyant start to February, and investor sentiment remains broadly positive on hopes of a $1 trillion stimulus deal and the continuing rollout of COVID-19 vaccines. That positivity has extended to the IPO market as well, and not just in the USA. Kuaishou, the rival to video sharing platform TikTok, debuted in Hong Kong, raising around $5.4 billion in new cash in what was the biggest technology sector IPO since ride-hailing app Uber went public in 2019. We featured Kuaishou previously, and it didn't disappoint. Kuaishou priced its IPO at 115 Hong Kong dollars a share. The stock rose almost 200% soon after opening, trading as high as 338 Hong Kong dollars before closing at 330 Hong Kong dollars on day one. Kuaishou's CEO, Su Hua, saw his stake in the company double in value to almost 19 billion US dollars, while venture cap investors 5Y Capital, who were an early backer of the company, saw their original $1.3 million US investment soar by 1,045% to be worth $13.8 million. It's that kind of value creation story that makes the IPO market so exciting. Closer to home, cloud-based webinar platform On24, listed on the NYSE with the company placed 6.30 million shares at $50 a share at the top of its expected range, and the shares opened at $77 and traded up to be as high as $81.98 before falling back. On24 has been in business since 1999, so its decision to go public came as a surprise. However, the company wanted to take advantage of the growing demand for video meetings and working from home. Dating app Bumble listed last week, raising $2.15 billion on an $8.2 billion valuation. The company offered 50 million shares, which they raised from 45 million at $43 a share. That came in at $4 above the high end of its upwardly revised range. Before that, it initially planned to offer 34.5 million shares at a price range of $28 to $30. Looking at the calendar for the rest of February, there are another half dozen biotech and pharmaceutical companies waiting in the wings for listings on NASDAQ. They are only really outnumbered by a long list of blank check companies or SPACs that are coming to or planning to come to the market this month. While on the NYSE, we have a mixture of healthcare and industrial companies waiting to list. In terms of performance for U.S. IPOs, looking at the last 100 deals that priced up to February 9th, 84 have seen their stock prices rise from the issue price, and only 15 have fallen below the listing price, a success ratio of 5.6 to 1. In terms of the class of 2021, there have been 50 IPOs so far. 42 of those have traded above their IPO price, while 7 traded down and 1 was issued unchanged. The total return generated by these 50 new issues is an impressive 44.98% compared to a year-to-date gain in the NASDAQ Composite Index of 8.7% and a gain of 4.1% from the S&P 500. According to Trackstar IQ, our proprietary search tracking tool, institutional investors have maintained their interest in IPO-focused ETFs. Electric vehicles are something that investors are very interested in, and it seems as though we could have a new entrant into the market before too long. Rumors have circulated that startup EV manufacturer Rivian Automotive will look to IPO as early as September this year. That story is made more notable by the fact that Rivian is backed by both Amazon and Ford. That's a subject that I'm sure we will be returning to in the near future. That's all we have time for this week. Remember, make sure to do your own due diligence before making any investment decisions. To find out more about our Trackstar IQ data, sign up for our free newsletter at investingchannel.com/Trackstar.